AI will not replace you, but somebody who knows AI and knows your job will. And if you're not going to learn it and you're not going to embrace it in here, then it's time to move on, because the world has changed so quickly, and we need people who are forward thinking, who are embracing this, who can do more with less. And I feel the same thing about Origin. And we will not get displaced by AI, but a company who does it better than we will, right? And now that's possible, to use AI as these thought leaders and really hypercharge your organization. We have to be careful of that. So if we're not on the leading edge and we're not constantly innovating and coming up with the next best idea and the best user experience and best marketing and everything else, and the returns, then we have to be concerned about being displaced as well.
Hi, Adam Gower here, founder of GowerCrowd.com and host of this podcast YouTube series, AI in Real Estate. My guest today is Michael Episcope, who is co-CEO of Origin Investments. And our conversation actually started technically before we were recording. So you're going to hear us just getting straight into it without any introduction. Origin Investments are the epitome of everything that I've been writing about in terms of how real estate companies need to reorganize and instigate or institute AI in their operations and in their thinking. Today's episode is a truly masterclass in what sponsors need to be doing, and is also indicative for investors of the kind of advanced thinking and operations that they need to be looking for places to invest. If you want to learn more about Michael, go to GowerCrowd.com, find the podcast page. And while you're there, go ahead and subscribe to my newsletter. I have been writing about a lot of the topics that Michael and I discuss today in detail. And you can always unsubscribe, of course, but you will get a sense from what I've been writing about of why what Michael and Origin is doing is so important, and why it's something to keep an eye on with the sponsors that you're working with. Okay, let's get on with it. Michael Episcope, we go straight into it, coming right up. Michael.
Hi, Adam. How are you?
God, it's so good to see you. How are you?
You too. It's been a long time.
It has been a while. Yeah, I'm definitely one of your biggest fans. You know that.
Oh, God, you're so kind. Thank you. Yeah, thank you.
I was actually reviewing the transcripts from our prior conversations, so I do have one question related to that.
Oh, my God. How long ago was that?
It was actually early 2018, so it's not quite as long ago as I thought.
Okay. That's when you had the Gower crowd going, huh? Yeah. Just
I think it was called something. Right? Yeah, it just started, I think.
What's the question?
Okay, the question is, you had... at the time, you had 600 investors, and we're hoping to get to 10,000.
God, we're close to 5,000 today, so we're halfway there. Yeah, the last I would say the last 4 years have been challenging at best, right? I mean, we started to see things tail off at the end of 22, so it's sort of 23, 24, 25, and then even into 26. We haven't seen the switch flip, but I do believe that's turning. I think we're going to see a turning point here in the next kind of 6 months to, maybe a year at the most, but it feels like things are finally moving in the other direction.
What's been causing that?
Sentiment. That's it.
Really?
I honestly think it's a psychology thing that people are looking at this asset class, and historically it's been an incredibly safe asset class. It's been a great grower. It's been a good long-term builder of wealth, and it's had 3 bad years, kind of the worst period it's ever seen in the last 50 years. So I think people are starting to dip their toe in, but it's not. I did some research recently, and you can see it across the board. It was you go back 2 years, Adam, and I think it was 8% of wealth managers want to allocate more to real estate. Today, it's like 54%. And you see like the sentiment changing with institutions. It's, it used to be in single digits. Now 70% are going to allocate more. 97% of individuals say they're going to either, hold on or allocate more. So I think it's just a timing thing. The market is healing. The only thing that can kind of disrupt it are interest rates and cap rates. How's my lighting on me, by the way?
Yours is fabulous, and that's why I
Okay.
adjusted mine.
So I feel like it's time, right? There's nothing wrong with real estate structurally. I just, there's been a healing process. It's taken a while, but I think people are seeing the value in it now, and they're saying, now would be a good time to sort of continue to get in there, maybe take some chips out of AI.
That's interesting.
Yeah.
One of the things that you did speak about in 2018 was the challenge that you had uh, educating investors. And one of the biggest issues was the IRR, that investors are
Yeah.
driven by the IRR. And yet this was something that you resisted. And so you put out educational materials to really teach people, what are the pros and cons of using that as a metric.
Yeah.
What have you seen over the last few years that have replaced the IRR as something that you've been battling with as you try and drive people to Origin?
Yeah. I mean, look, ultimately returns. When people get in, you have people in different camps, people who really understand that, look, the way to build wealth is through the long-term compounding of even average returns versus like going after these high returns, over a short period of times. It just doesn't work. And that's why, when you look at real wealth, it's created just over compounding. And, Morgan Housel, I just saw him speak at a conference recently, and he's so good. Do you know who that is?
Vaguely, yes, I
Yeah, he
do.
wrote The Psychology of Money, and that was his whole thing. He was talking to wealth managers on that side, and they understand it, right? Like when you have, think about this. If you are generating 10% per year, right? People, some people are like, "Oh, I'm not getting into real estate for 10%." But you'll get into the stock market for that. But the reality is, like, think about $1 million and where that will be in 40 years, right? You can do
Mhm.
the compounding at 10% because every 7 years it will double. So you have 2 million, 4 million, I mean, you've got 6 times almost, let's call it 5 times doubling within that time period. It goes 1 to 2 to 4 to 8 to 16 million and, possibly to $32 million. So that's a huge multiple over 30 years. And even, at my age, I think about this, I'm 55, hopefully I'll be around until I'm 85. And those are the kinds of things I think about, not how do I chase the next, kind of great deal that's going to try to give me 18 to 25. It's like anything at it, it's like you're gonna swing for singles and doubles every now and then. You're gonna connect with one and put it out of the park. And, you just got to avoid the big losses along the way.
Well, that's exactly right. I mean, the best way to make money in real estate is to make it slowly, as they
Yeah.
say.
Yeah. Yeah.
All right. So what I actually would like to focus on with you today, if that's okay, Michael,
Yeah.
is the impact of AI on Origin and on the market and on the way
Uh-huh.
you think. And actually, this long term. So now because we've started talking already,
Yeah.
you've thrown all of my
We're not we're
questions
not
out
we're
of
not
sync.
recording here, are we? Yeah.
Yes, we are.
Oh, we are.
Yeah, because otherwise I would forget. I don't want to forget
Okay.
to record. So I started. So let's just go with it.
All right.
Normally
Let's
I'd
just
open
go
with
with
a
it.
little
Okay.
intro or something,
Yeah.
but it's as long as you're okay with it, let's just roll with it.
I'm good.
All right. So this is something. So all of my questions are now out of sync. I put a load of effort into making a logical sequence. So I'm going to go out of sequence now completely. So one of the things that I've been thinking about a lot recently is this idea of long-term investment in real estate. And typically when you underwrite a deal today, you're looking at minimum 3 to 5 year hold. AI is fundamental. Well, what is this? It's doubling its output or its capabilities every 3 months or something. I mean, the impact over the next 3 to 5 years of AI on the macroeconomic environment and on demographics is going to be like nothing we have ever seen before. How are you, how are you thinking about that in terms of the way you predict or decide what to invest in?
That's a good question. I mean, we've never seen a technology change the landscape this quickly. And the reality is nobody knows, right? And so we focus on the things we can control, the here and now. And I know within the world of AI, there's those who believe that you have the doomsayers thinking that there's going to be massive unemployment. And then you have the people who believe that this is going to be the next industrial revolution. And I'm sort of like on the latter half there. I actually think this is going to be amazing for the economy. And all we've seen is a net creator of jobs. I mean, this year alone, I think the top 7 companies are going to be putting in $1 trillion into CapEx, $1 trillion. And so, like, what I know for sure is the landscape of jobs will be changing and they will be shifting. And there's jobs today, we're hiring for one called an AI integration lead. That didn't exist 4 years ago. And so like our people, our department there is getting bigger because we really want to put these tools in the hands of our senior executives and even our junior people so that they can work smarter, they can work more efficient, they can get data and better decision making and just better communication across the firm. So I don't subscribe to this idea that it's going to be this dystopian future. I'm actually incredibly optimistic. And if I were an entrepreneur today, I would be more optimistic than ever because this is the time where in a weekend, you can go into your basement and you can literally create a company. And there are companies out there that are going to be unicorns with 1 or 2 people. And so like if I were 20 years old again, I would be embracing this fully. And as a company, we are, and we're doing everything we can, but you have a huge advantage for starting up new. It used to be that if you had an idea, you had to go find technical people and engineers and do all this. And now you can go into AI and I'm super excited about it. Your question though, Adam, about how do we incorporate this? There is a risk there, right? There's a risk to everything when you're looking out into the future. I mean, we just saw what is it called? The SaaS apocalypse or something like that.
Yes.
That note that was written by Citrini Research. Was it well researched? Not really. There were a lot of people who came out against this. I don't think Salesforce is going anywhere because at the end of the day, AI needs structured data. They need a single source of truth. You can't just put AI into a sloppy lake of information and expect it to come out, with something that's good. It's probably better than it was, but you're still going to see SaaS out there. You're still going to see jobs. You're just going to see a shifting of the market. So we're keeping an eye on this and focusing on the things we can control today.
Yeah, so this is a very important point, this idea of going into your basements and starting a company. This has been something that I have been focusing on. You're quite right. By the way, I'm also not dystopian. I mean, there's all this dystopian talk, but I'm also very utopian actually as well. I think of AI as being a new utility, and you can look at electricity and other utilities as they rolled out. This one's just going to impact the world that much faster and have that much more impact. But my question is about job displacement, and that is certainly something that is commonly understood. You've hired somebody, but there are plenty of people that are being impacted, and a lot of like knowledge workers and white collar workers. And a lot of them are your residents, right, in Class A buildings in certain locations. Do you look at that in any way and the potential for impact? I think of it as paths of progress, that those paths of progress are shifting because of AI. Are you thinking in the same way or not?
Yeah, we are, Adam. And I actually wrote a paper on this recently and did some research because I wanted to learn and understand it. I mean, that's our job, to really look out into the future and understand the risk. And as I was saying before, there's going to be a structural shift. There's a lot of jobs out there that are not safe today. And there's also a lot of jobs out there that will exist that we didn't even have a name for them, that I was talking about. So these will shift. But the reality is that, when we look at the landscape, where are these jobs going to be? Where is the growth going to be? The population growth, where are they going to be changing? And you kind of come to the same conclusion. People are going to be moving to the Sun Belt states. They're going to be moving to tax-friendly states. That's where the demand is going to be. You've already seen corporations moving away from the blue states, from California, Illinois, New York, places like that, moving down south to Miami. So I think where you have these job displacements are definitely going to be as these companies start shifting. But I'm still a big believer in these growth markets, and that AI is going to be an engine of growth, right? Through data centers, through infrastructure, through technology, through things that we can't even imagine today. And I just go back, I've been through, and everybody says this time is different, this time is different. I hear that all the time.
Mm.
And I'm like, look, I could tell you that every single time fear rules out and what people think and they believe and this dystopian view. And Anthropic, I don't really understand what they gain for this, but they've been they've perpetuated this idea of this dystopian view as well. But if you really go and look at the research, there's more, I would say there's better research and more data on this idea that the future is a lot brighter than what we think it's going to be. So again, it's a shifting landscape. It's not, maybe not a zero-sum game out there, but I do believe that net, we're going to be in a much better place in 5 to 10 years. So, and I know you'll have me on in another 5 years. And we'll be quoting this.
Right.
And, we'll
2031, we'll do it again.
Look, if you don't have optimism, what do you have, right? And so again,
Yeah.
you want to be optimistic, but cautiously and not blindly go into the future. But like I said, that's our job, to look out there and understand where the jobs are. And all the data that we're looking at today, unemployment is still fantastic. Job creation is great. The demand for multifamily is off the charts because of some of the dynamics going on with the for sale market. But we're in a really, really healthy economy. The only things we have going against us today are the debt and the interest rates right now. And those two things, concern me the most. And, unfortunately, I can't control either, but we can mitigate them in some ways in our portfolios and individual properties.
Your white paper, the paper I would love to see that. I've also written something up. Yeah, I would absolutely love to see that.
Yeah.
I'd be interested to see how it overlaps with the thesis that I've been writing about.
Yeah, and I wrote this internally. We haven't even published this yet, but it was really for internal credit committee because this conversation comes up so much. And what I love about what's going on is we don't have to guess anymore. You have the power of the universe at your hands. And the magic is, how do you prompt these things? How do you do it in a way that's neutral? How do you get the data? How do you look at it from both sides? So it's truly giving you information. If you go into AI and you say, hey, write the argument for why AI is going to be good, you're going to get the response that you expect. Right. But if you start talking to it and prompt it in a way that is in a neutral way, a prompt, and you really say, hey, is this prompt neutral? You can ask it and it'll say, yes, but here's what I would do to get this. And then you create that prompt and do it. And that's what it is. And as you know from using AI, sometimes these can take hours to actually build something very, very good in terms of research quality and being thoughtful. So I'll absolutely send that to you.
Oh yeah, I would so like to see that. It's actually interesting that you talk about AI in the way you did just now. Just curious, before I move on to my next question, so what platform do you like to use the most, Michael? What LLM?
Well, we're really agnostic on that. I mean, I think Claude is kicking everybody's butt right now, and OpenAI is struggling. Grok is, I don't know, they're fourth or fifth, but we have like an enterprise layer over Origin, which we're implementing right now. It's called Ask Simon, and essentially what they do is they're integrating right into Microsoft into our suite, connecting all of our data together, and then we have a list of LLMs. So depending on the query, if you want to create images or you want to do deep research or you want to just connect with data across the organization, that system essentially has a switching mechanism. So it will defer to the LLM that is best for that particular query. So it's a great system, and it's really opened our eyes up quite a bit because this was novel, and I felt like we were on the leading edge, and I think we still are in terms of adopting this. But we went from engaging this company last year. They were building this on top of our organization. We launched it a couple months ago. And it went from being, I don't want to say a nice to have, we didn't really know what we were getting, to it is so integral to everything we do, like 2-3 months later. I've never seen anything like it. I mean, I can't, it's just, these are amazing tools. But I will tell you, and anybody listening to this, you have to be careful about using external LLMs like Claude or ChatGPT because they're not secure. All right. And all of your data, it's going into the system, it's feeding the system. So to have these enterprise systems that only look at your data, they obviously rely on the brain of the LLM, but they don't share your data with the outside world. So that was really important to us that it integrated with Microsoft. And what I love about this technology, and this is fun because we've had tech in the past. The problem with technology, it becomes outdated, it becomes old. So the cool thing about this is when you're building a system internally, as the LLMs get updated, your technology automatically gets updated. So it's really, really exciting, all of these outputs that are happening and watching the system grow and learn and get better and better. So there's not a day that I don't go into it. And this is something that my partner and I are really, really passionate about. And every meeting, okay, did you ask Simon? Did you put that into Ask Simon? Did you, run that through Ask Simon? And people are kind of looking at you like, oh, I didn't know I should do that. Or why, and so I really think the magic though happens with a human in the middle, and you have to understand the context. And this is why I was saying in that paper that I wrote took a few hours, right? To really hone it down. I didn't like this, I like this, and you keep going and you do that, but you need a human who understands this. So I don't see that it's going to completely replace people, but it will make everybody a lot more efficient and better at their job.
Yeah, unfortunately, it's made me a lot busier because I'm able to do a lot more. So I do a lot
Yeah.
more.
Yeah,
It's got all
right?
kinds of things going on
Yeah.
at the same time constantly, and I'm constantly thinking of other things to trigger. So I actually
Well,
end up being a lot busier.
Adam, we say like in terms of employment, and we've told our team this, and we really wanted to make them more efficient, and we want them,
Mm,
and if everybody does this, Origin will become a better place. And our mantra, and our message to everybody is, look, AI is not going to replace you, and we're not like doing this to as a jobs cut program. We're not trying to do that. We're trying to make Origin a better place. And I will say this though, and we've said this to our team, like AI will not replace you, but somebody who knows AI and knows your job will. And if you're not going to
mm,
learn it and you're not going to embrace it in here, then it's time to move on because the world has changed so quickly, and we need
mm.
people who are forward thinking, who are embracing this, who can do more with less. And I feel the same thing about Origin. And we will not get displaced by AI, but a company who does it better than we will, right? And now that's possible to use AI as these thought leaders and really hypercharge your organization. We have to be careful of that. So if we're not on the leading edge and we're not constantly innovating and coming up with the next best idea and the best user experience and the best marketing and everything else and the returns, then we have to be concerned about being displaced as well.
Uh, you are at the leading edge. I speak to a lot of sponsors. That's why I love talking to you and getting to know you, Mike. You always have been. So how do you train your team on AI? Like, what is your internal process for that? Do you have formal training, or you just say if you don't use it, you're out the door?
No, we do.
I
So,
know you're not like
like I
that.
said, so the training starts really with leadership, right? So in our last
Mm,
quarterly meeting, and the quarterly meeting was all about AI, right? Come with your agenda, come with what needs to be done in terms of your data, the cleanup, everything else that we talk about. Who's your AI champion on your team? What do you want to get done, on your team? So you
mm,
have to identify the problems that you're going to solve first, right? What are the things that are really keeping you from operating at your highest and best use and really thinking and thinking forward and not in the weeds? Because let's be honest, like there's nobody out there who can't make their job more efficient using AI, and everybody has something that I don't love doing. I don't want to do this. And if you can do AI, use AI to do that, that's great. So it really starts with the leadership team, but then it's accountability. So what we're doing internally is we're building a standalone team that is our AI integration team. And they are focused on the
mm.
data, they're focused on the operations. This will probably be at the end of the year, a small team of 3 people, a little tiger team, but they're a resource for the rest of the organization. And they keep on track. Okay, how is this division doing? How is that division doing? What are the queries? What do people need help with? If there's queries or data that needs to be connected, they're helping with that as well. But that's really where we want to put the money into, is this team to make everybody else more efficient.
That's the biggest challenge,
Yeah.
actually, is you see I think the overwhelm that people have with AI is that they know it's incredibly powerful, but they're not sure how to use, like, how do I,
Yeah.
like, Claude Code and all these different, what can I do with it? So if you've got a team there that understands what the possibilities are and are talking to your team members, about the challenges they have, they can bring those solutions, and that's very powerful. So let me ask you this. To what extent do you communicate this with your investors, and how do they respond if you do?
So we don't, the only thing we communicate to investors really that impacts them is the multi-analytics platform that we've been
Right.
building for the last 4 or 5 years. So we were really into the machine learning side and the AI side before it was kind of in vogue. And I think we talked about that maybe a while ago, but multi-analytics is our
Hmm.
proprietary machine learning rent forecast tool. And we embarked on that, I think, 2019, 2020, right around there. That's when we started building that. And so that really impacts investors because it impacts the way we invest and how we make better decisions. This is operational. So I think our investors would probably like to know this, but it will show up in the user experience ultimately, right? Building better quarterly reports, building a
Right.
better user experience when they come to the website. And these are little tools. But right now, this is all about making our team more efficient, and that's the number one goal because they've been really clamoring for information across the organization, and we, like everybody else, operate so inefficiently. If I need to know, how our portfolio is doing, I have to email Mark Turner, our director of investments, and then he has to go through in his file and get all this stuff and then send me, and that's not a good use of his time. Or if I need something from legal or accounting, I had to do that. Now I just go into the system and I say, okay, what's our balance sheet look like? What's our cash flow statement? What are our, give me the top 10 deals. What does the fundraising, look like month to date, year to date? So these are queries that I used to have to send out to our heads of divisions. And, reporting is something that it doesn't really add value when your heads are actually spending time heads down, putting these things together. Now I can just get it and they can focus on doing their job, which is managing the real estate, finding deals, focusing on, client experience, et cetera. So that's kind of how we're doing it internally.
So you would describe that as restructuring of the of how Origin operates, would you?
Yeah, yeah. I mean, it's taking. I
Mm.
think the best way to think of AI is you have to have a real world roadmap of how things operate. And I always say, it starts with sort of ropes and pulleys. Like this is how I want it to operate, and then you layer on AI to make it all more efficient. So, we've been operating for 20 years now, and a lot of our systems and a lot of our processes are not as tight as they should be in terms of operations, where people are putting folders, managing things, the communication across divisions. And so, that's really what we want AI to do first and foremost is make us operationally efficient so we can continue to deliver a great product into the market and have our team focus on, what they do best.
This is something I've been talking about a lot recently, is that real estate companies will restructure internally in order to take full advantage of AI. And so I wonder, but is this not something you think that, look, there's a lot of concern. We talked about it, right? People are overwhelmed with AI. They're not sure where to start or how to start. And there's a lot of dystopian view. But when you do put it forwards, it is very attractive to people. I mean, it's definitely something people are interested in. Just curious. I mean, again, just going back to the IRR story, it was something that you faced, you had to deal with, you had to write about it, and you did very effectively. Is this not something you think that, in the context of having had a hard time over the last few years for investor sentiment, or because of investor sentiment raising capital, something that you could talk about that you think would be attractive to investors? Here's a company that's really embracing it internally. We want to be part of that winning team.
You mean how do we spin our AI story outward to investors? Is that it?
Yes,
Yeah,
exactly.
Adam, I'm sure there's a story there. It's
Mm.
it's just part of our DNA, and I look at this. We didn't really do it for that reason, and that can be one of the ancillary benefits. But the reality is, this to me is one of those areas where the risk of not adopting it is so much greater than the risk of adopting it, right? And the cost of adopting it. And I would
Mm.
say, like I thought where you were going earlier is, there's a lot of people who haven't jumped on this bandwagon. They don't know where to start. You just got to get in because the risk is that you're late, right? And that you are operating in
Mhm.
a business model that is 5, 10, 15 years old, where everybody else is now operating and running 50 miles an hour faster than you are, right? It's like, you're in a race, you broke your ankle and everybody else keeps running in that situation. So I think about it first and foremost as like, here's the number one agenda: help our team, build our organization, make us operationally more efficient. And yes, we are talking about, okay, then once we have that, how does this extend to the outside world so the investors see it, feel it? And there is some fun stuff to think about because I have access to data right now. Like if I can go in there, I can look at somebody's account. Well, I see a world in which the, traditional investor portals, maybe they go away a little bit. Maybe you have a dashboard, but you can start asking about your investments and getting insights and doing things like that. And it's more conversational, as if you're talking to a person. So I get excited about thinking about those things, especially about the user experience side. We haven't spent enough time on there, but there's definitely that's coming to that side as well.
How do you handle quality control with AI output? Because this is obviously something very important, right? In terms of, right, the kind of, I mean, you live in a fiduciary world handling large amounts of money. AI hallucinates. There are challenges with it. It's not perfect. So how do you deal with QC?
Well, I think that's one of the beauties of the systems we're on, which the Ask Simon system is built around this. But I'll go back to what I said earlier. And the beauty of AI and the magic happens with a human in the middle who knows what they're talking about. So when it's early on and your data is messed up, you start by making queries, but you already know the answer. And you're testing the AI internally and you're asking it simple questions. Well, if it gives you the wrong answer, then you have to look at how is it interpreting the data? What data is it looking to? And then you might have to rearrange things. And you keep going, and it's an iteration of the system. But I would say a lot of the stuff like externally that we're doing are research papers, and every one of our research papers or our blogs or anything like that uses both internal data, maybe opinions, and then also researchers' external data, and it includes every single link there as well. So this has been thoroughly vetted through compliance, through legal, through everything. So I'm not concerned about it hallucinating, but I have seen that in standalone editions. We were doing, I don't remember, I think it was something around QOZ law we were researching, and I was asking it to review, I think, something that came out from the Senate, and it gave me the exact opposite answer of what I said, well, where did you find this? And it's like, oh, on page 76. And I go to page 76. I'm like, I'm on page 76 and I don't see anything. And it's like, oh yeah, I was hallucinating. Sorry about that. And I thought you just wanted me to give you the answer.
Right. Sorry about that.
But that's what you have to be careful about. And that's why I say it's got to be a human in the middle. And you have to know when to call BS on these things and say, that doesn't look right. And you can't put somebody junior writing really like research oriented articles about the world. You need somebody who understands the world, how it works, who knows enough about the data to understand when things look a little bit off or when they look right.
So this is an interesting point. You can't put somebody junior on that. You can only use experienced people. So how do those junior people learn?
I think that's a good question. I mean, look, you learn by doing. We were all junior at one time, and I think AI now with the power, you have the ability to actually learn a lot faster instead of fumbling through. So the amount of information that a young person can digest and ingest today, and as long as they're reading, as long as they're doing stuff, and it doesn't mean that they can't. I'm talking about in context of like really deep research articles, right? The young people should be reading that to gain the knowledge so that they can ultimately write those things someday. But the idea that somebody who's, kind of fresh out of school or early is going to be able to understand the deep research. And I'm not taking, there's a lot of really smart young people out there, but you have to understand how the world operates and works before you can start writing really good pieces out there or thinking about investment strategy or other things. So I'm going to go back to what I said, a human in the middle, right? You need somebody with knowledge. And I would say for young people, they just have to gain as much knowledge as they can, but firsthand knowledge, right? Not secondhand knowledge, not knowledge, what I'll call primary knowledge, not headline news, not TikTok news, not, all that stuff, but actually doing like real research.
And as Simon uses, what is it? What data set is he? Is he just using all
ours. Yeah.
All of your knowledge for the last 20 years. Is that basically it?
Yeah. I mean, a lot of that knowledge is hidden, right? You don't want to give it too much knowledge because you'd be burning through tokens very, very fast,
I
and
see.
that would be it. So, for any AI system to work, you
Mm,
have to have structured data underneath the system, and then you layer agents and things on top of that, and
right.
you have to point it to the right places where it's going to get the data from because this is the part that I've learned recently. If your data is not in good order, and some of our divisions, their data is great, but some are a B, some are a C, some are an F. And, when you have an F and your data is, anywhere between your desktop or on your OneDrive account and then on your SharePoint and it's scattered all over, you can't ask AI to make sense of any of that, right? It can find data, you can tell it where to look, you can do that. But structuring that data is the heavy, heavy lifting. So anybody thinks that they're going to, get an AI system, put it right on top of whatever technology they're using and get out, this treasure trove of information is kidding themselves. It doesn't work that way. I mean, we've been at this for 6 months and we have constant, updates weekly. We have
Yeah.
meetings with our team monthly about their data organization, and it's a heavy lift.
Do you use any novel data sources? I have one specifically in mind
Tell
that
me
we've
what
been
yours
working
is in
on.
mind.
Okay.
Maybe I'm not sure what you mean by
Yeah,
novel.
no, it's all right. A little unclear. But so we've been working with a shop that sells sentiment analytics to institutional investors, very successful. And what they do is they read gazillions of social posts and whatever there is across the entire globe, actually. And then they derive from that investor sentiment or sentiment.
Hmm.
And it's turned into it proves to be extremely predictive or significant, what's it called? Statistically significantly predictive of where the market is going to go over the short term. Is that something that you've
Well,
ever considered looking at?
where's the market going? I think what's the punchline here?
Well, I think I think it's more of a daily thing, but that's what I'm.
Yeah.
I'm interested in that because I do think that there will be shifts. You talked about some of the major macro factors driving demographics, right?
Mhm.
Low tax rates, better weather. You didn't say that.
Yeah.
Better weather in the Sun Belt,
So,
etc.
Adam, it's a good point. Look, I think about information that's actually useful and that I can act on, and I don't know that I
Mm,
need up to the date, up to the day sentiment information. That wouldn't make a difference for what we're doing or how we're acting or behaving or making
mm.
decisions. So I think about it more like what is the useful data that we can have today that is really going to help us with long-term decision making. So you and I started this conversation by talking about sentiment data, and I did some
Yeah.
research, and it seems like maybe a lot of people are subscribing to that, but the sentiment has really changed in real estate, and I'm optimistic for the next, kind of 6, 12 months. I think we're out of the woods here in this recession, but nothing, novel. A lot of the data we're getting is not like anecdotal. It's not forecasting data. It's sort of, going into the ground and understanding like, hey, what are current rents right now? What are the concessions? Where are insurance costs? What's our comp set doing in terms of current occupancy, in terms of turnover? And we want to constantly measure data. And this goes right into all of our underwriting. And this is what Multilytics does for us too, is
Right.
it, for lack of a better word, scrapes all of the data. We have systems that we subscribe to, but that information to me is really, really important. Understanding the rent forecast, what's happening with the current supply, what's happening with the demand situation, with rental rates, where those are trending out there. Those are the things that really lead to today's decisions and what you're going to do in the go no go.
Yes, and this was actually the point I was going to make. So I'm going to push a little bit on it. Multilytics looks backwards and it evaluates where trends are going based on what's happened in the past, presumably, right?
Kind of,
Okay.
not really, but
It
okay.
doesn't.
It's a
Well, so
forecasting tool. Yeah, so
it
it
is
it
a forecasting tool, but
yes.
based on historical data, right?
It uses both historical data, right, to understand like you have to understand the history to understand, what is actually moving the markets, right? And you have to be able to back test your models. So whenever you're creating a model, the first thing you're going to do is say, look, in a vacuum, if I'm looking at history, how would it map out to what actually happened in that? So Multilytics ingests billions of pieces of data every month, and it's everything from population statistics to moving statistics to it's all the things that really impact job growth, the economy, interest rates. It's everything.
Right.
So it looks at all of this to create a forecast, but it's using today's information to extrapolate what is going to happen over the next 6 months, year, 2 years, 3 years. And as you know, like there's no perfect forecasting tool. So the dispersion, the further and further you get out, I can't tell you with any accuracy what is going to happen to the market in 5 years. But I would say that a year, 2 years, maybe even 3 years out, it's proven to be the most accurate forecasting tool on the market.
And that's exactly my point. David has talked about this as well. Your partner, David Shearer, has talked about this as well, is that the projecting forwards is unclear. So the impact of AI is not yet seen in the data that you look back on. But as somebody who has experience, right? So as a leader in the industry, right? You're not just asking AI for questions. You're actually imposing that human intellect on top of it. Just back to this idea that AI is going to fundamentally change macroeconomics and demographic shifts that have not yet shown up in the data that you're reading as you look into the future and forecast. Is that not, not something that you've tried to figure out? I mean, I've actually spent a lot of time trying to identify paths of progress, both from infrastructure. Well, look, go ahead. And how those are changing.
I think it's embedded in Multilytics in the sense that it's picking up the real-time data of today, right? Trying to predict, and everybody wants to point to these large technology companies laying off 20, 30,000 people. We saw what happened to Twitter where they laid off, 70% of their workforce, and they were like, we don't need all these people, right? And those get the highlights. And I always say AI is like a GLP-1 for the large bloated tech companies, and it's steroids for the entrepreneur. And I just like the one thing is that you don't see headlines, hey, this company's like hiring this many people. But when you really look at the statistics, the job market is so incredibly strong right now, but it is shifting. And so we're not like, these are the things that when you look out into the future, you have to be aware of these situations and what could happen. But as we sit here today, I don't see a reason to hit the panic button. I don't see a reason to, sound the alarm. We started this off. I'm optimistic and I see what's going on. I see how our business is growing. I see how it's impacting us in a positive way, others. And people, they don't want to believe that it can have this positive impact. But I mean, when you look at the trillions and trillions of dollars and the impact of GDP, I don't know. It's hard to argue that it's only been a positive effect. Will it have a negative effect someday? Maybe. We just don't know.
It's interesting that you seem to have a lot of exposure to people who are very dystopian about it.
I listen to a lot of podcasts, Adam, so I hear both sides, and there's definitely people internally at Origin who have a different view. And I've always learned this from my previous career that you can have an opinion, but don't be opinionated. Understand like how the world can unfold and have a plan for both of those worlds. But like, don't go in and say, I know what's going to happen, because you can't know what's going to happen. So I could sit here today. I want to be optimistic, right? What good does it do for me or anybody to be so fearful about the future? I know those people and it's not fun, and listening to them. And it's just like, so, I don't know. There are a lot of podcasts. I try to be balanced about that. What I hear out there, what I listen to, hearing both sides. And I choose the side of optimism.
I had the pleasure of talking to Mark Zandi, who is chief economist at Moody's, as you probably know, at the end of last year. And I listened to his podcast. He's terribly gloomy. about it, which
Okay.
actually I quite
Yeah.
like. I do like to
Yeah.
have that, alternative view as well, as long as it's from somebody
Yeah.
who knows what they're
Well,
talking about.
Adam, what I find funny, like the reason why, like it's human nature to accept the doom and gloom view because that's how we are wired as
Hmm.
human beings, right? Like this is in our DNA. And anybody who's in a room, and this has been studied over and over, the optimist in the room isn't looked at as smart as the pessimist, right? The one who's pointing
Hmm.
out the risk and what can go wrong. And so the argument, it always, people always tend to gravitate towards the negative argument. And a lot of these podcasts, I don't even know if they actually believe this or if they're just trying to be controversial and get
Hmm.
more people on there. But that's human nature is that anybody in a room who's talking about the negative view of the world and what's going to happen and you get people, oh yeah, the debt is going to destroy our economy and what's going on here and there and stuff, and you just find yourself wrapped up in that stuff, but the nobody gravitates towards the optimist. But I will tell you, historically speaking, the optimist has been right in this country.
So what is going to be the biggest impact, do you think, on our industry over the next 3 to 5 years of AI? Where do you see our industry changing, if at all?
Yeah, look, I think everything's going to be changing. I think for one, what we're doing, I think you're going to see operationally, it's going to be very different. People are trying to figure out how to do more with less. And you're going to see that at the property level. There's a company out there, Elise AI. I'm sure you're familiar with them. They're trying to
Sure.
automate all of the property management. And we would love that, right, as well. Because think about us as an investor that if we can buy a 4.5 cap piece of real estate, a trophy multifamily, and we can turn that into a 5 cap with expense savings, that's fantastic. Now we can do that, and we
Mm.
certainly want to be on
Mm.
the front edge of that, not the back edge, the back half of that, right? You don't want to be um, a laggard there. And then, in terms of an organization, we want to improve everything in our organization. So I don't, like, I think the real question that you're asking is how does it impact the landscape of multifamily, of industrial, of the job, the population growth? I think that you're going to see a lot of the same that we've seen over the last kind of 7, 8, 10 years, which is a move to the red states. You're going to see more business friendly moves going down, businesses going down there, CEOs going down there. I think California is in a lot of trouble. They just try to pass this wealth tax, and just the very nature of that. You had a lot of billionaires who left, who created a huge hole in that economy. I think Chicago and Illinois are in a lot of trouble too, and they just like with what's going on here, and you have these states like Texas and Tennessee and Florida that are absolutely attracting more and more jobs. And so wherever these jobs are going is where these new AI jobs are going to be created. But it's again, it's going to be a shifting landscape. And I still think there's always a place for multifamily. It's an essential real estate. People need a place to live. And right now, like it's a lot cheaper to rent than it is to buy. So I don't see what the alternative is.
Okay, let's wrap up. Last question. So what's on the, so we talked about a lot of things, but roadmap for the rest of the year, for Origin. What have we got to look forward to?
Well, we already accomplished a lot this year. So what are we in kind of end of May of 2026? We launched our
Almost
interval
June.
fund this year. So that was our credit fund that we converted because we talk about like user experience in terms of friction in our products. And so this is something we did recently. We had a private credit fund that was uh, it was a K1, a partnership. We converted that into an interval fund, which can be bought by a ticker, right, through a wealth manager, Oryx,
Ah.
Orox. You can buy that, and so that's great. And that was a huge movement in our
Hmm.
evolution, if you will, to have a publicly traded ticker. And so that's been great. That's all real estate credit. We converted
Hmm.
the Income Plus fund to a private REIT. Now it's 1099. It's not K1 anymore. A lot of people like that. And so, I think about going back, I see much more. It's like you have to focus on your core business and doing the stuff that you do very, very well and continuing to improve every day. So, you're not going to see any new products from us out there. We're going to keep doing the same. We've got a great suite of products and we're just going to keep improving on what we're doing. And I am, I hate to use the word optimistic again, but I'm going to here. And you were talking about sentiment earlier, and we see
Hmm.
that changing too. The conversations are so different than they were a year ago, 2 years ago. I was at a conference last week, and I had wealth managers coming up to me saying, "Hey, I want to talk to you about your income plus fund. I want to talk to you about this." And I think that makes a lot of sense because we've been in this recession for 3.5 years in
Hmm.
real estate. There's nothing like structurally wrong with it. It's not a cassette tape. It's not going away or anything like that. So,
Hmm.
you've had a garden variety, maybe not garden variety. You've had a bad recession, and people are now seeing the value in it because the healing has begun. The supply is disappearing. The public REITs are starting to report really, really good information. The only thing that is going against us right now is you have a rise in interest rates and cap rates. But like you have an industry where you have rising earnings and you have declining multiples right now, and they're kind of fighting each other. So I think at the worst, it's going to be neutral. And if we get a little tailwinds, if we can get out of this war, if we can get some good news, it's not out of the realm of possibilities to see our interest rates back around 4, 3.5 in the long end, the 10 year. I'd love to see that. And if that happens, I think you're going to just see a flood of money coming back into real estate. So for now, I think we're in a really, really good place as the supply situation cleans itself up.
Okay, so now I definitely understand why you're standing in a corner on your own being optimistic when you talk about interest rates that way,
Yeah.
especially with what's going on. We got Walsh joining the Fed anyway. It's like he started. Has he started already? Not quite, right? He's
Yeah,
on
I
the
think it was
verge.
Jerome Powell's last day this past week. Yeah.
Yeah, right.
Yeah.
So we'll
Yeah.
see a new environment over there at the Fed. Michael
Maybe.
Episcope. Oh, go
Yeah. I
ahead,
don't
go
know.
ahead.
Well, I was going to say, I think they're in a little bit of a jam right now. I mean, you have a really,
Oh
really
yeah.
healthy economy and you
Mm,
have inflation. So how can you possibly lower interest rates into an
right.
environment like this? What is the argument? There isn't one, right?
Hmm.
Ultimately, they have no control, zero control over the long end. That's what we look at. That's what matters for
Mm,
pricing in their risk-free rate into models and stuff. And so, like, I think as of now, I didn't look at it today, but I think the 10 year is hovering right around 4.6%, which we got to get that down. And they have to figure out a way to do that.
hmm.
Who cares? Like if they lower the short end right now in the face of what's going on, you're going to see the 10 year go above 5%. So
Well,
I don't, yeah.
sorry, I didn't mean to interrupt you.
No, no, go ahead. Yeah.
I was just going to say, I mean, it'll just light a fire under inflation. I mean, there's no, not a good scenario.
No, no, it's not.
Michael Episcope, co-CEO, Origin Investments. Oh my goodness, what a pleasure seeing you again. Thanks for joining me today.
Thanks for having me, Adam. It was a lot of fun.
All right, that was Michael Episcope, co-CEO at Origin Investments. Michael, it's always such a pleasure to see you. Thank you for the conversation today. I have always said this and have always thought this ever since we first met, however long ago it was, 8 years ago or longer even, that you guys are at the very cutting edge of the real estate industry. And our conversation today just reinforces that perspective. So thanks so much for joining me. And for you too, dear viewers and listeners, thanks for joining us today. If you've not already done so, do please go ahead and subscribe to my newsletter where I talk about a lot of the topics that Michael and I covered today in the show in considerable detail. So if you enjoyed the conversation that Michael and I had, you will enjoy the newsletter as well, all there at gowercrowd.com. Okay, that's all I have for you for today's episode. Thank you for joining me. And until next time, this is Adam Gower signing off.